Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1015A, and today's date is July 6, 2016, and the title of the episode is EU Banks Are in Trouble. Central Bankers Are Blaming the BREXIT as the Catalyst. Let's get into the economic collapse financial news. Now, today was a very interesting day on the market. We saw that the market started down in the morning, and the high-frequency traders, the plunge protection team, the free money that the Fed allows these teams to use, they were able to pump the market back up. And they weren't able to pump it up that much. But we see gold is still surging. And we see that it's continually making new highs each and every day. And we're getting closer and closer to the $1,400 range. Now, I do expect the powers that be, the elite, the central bankers, to dump millions upon millions of contracts to try to bring this down once again. This might be happening later this week or the beginning of next week, but we can see we are due for it once again. Now, how far are they going to bring this down? Most likely not by much. We've seen from the past that they've brought it down maybe $30, $40, $50. We might see that. But what happens is gold then rises once again. People are getting into it. And it will make new highs. And this is something that we need to watch. Now, Europe, it is completely falling apart right now. Now, has it just started since we had the referendum? No. This has been going on for quite a while. We've been tracking it, we've been following it, and we understand that Europe has always been collapsing. The unemployment numbers are manipulated just like the United States. GDP numbers manipulated. The EU is creating currency out of thin air just like the United States. We see right now that each one of these central banks, all they're doing is passing the baton from one central bank to the other central bank, saying, okay, it's your turn to create the currency. So when we look at it and we step back, we can see QE really hasn't ended. It has continued on. So they've been creating currency on an ongoing basis. And when we look at these European countries, they are hit very hard. Italy, for example, we understand their banks are in major trouble. A lot of the EU banks are in major trouble. But when we look at the retail sales in Italy, we're seeing that retail sales, they have fallen. These are the worst sales performance since December of 2012. And we see markets adjusted Italy retail PMI, which tracks month-to-month changes in retail sales, dropped 40.2 in June from 45.2 in May. This signals a sharp acceleration in the rate of decline in retail sales. So we're starting to see things really break apart. In Spain, we understand their economy is also not doing well. Remember, a lot of these countries have a huge amount of debt. Italy just made a deal with the EU to have bailouts instead of bail-ins. And of course, they're using the BREXIT as the excuse of why they can do this right now. Spain, their social security system, it's expected to go broke by 2018. Remember, Spain cannot print euros. They can only borrow from the EU. And it's already in a deep hole. And it's getting worse. We understand unemployment is continually rising. Debt is continually rising. And the situation does not look good whatsoever. Here in the United States, the illusion of an economy that's doing well, they're continually trying to push this on the entire country, saying, listen, you need to believe us, the economy's doing well. But when we look at the economy and we look at all the economic indicators, we see that no, this economy is not doing well. We see that the service sector, the business confidence, has hit record lows. Markets' Chris Williamson sums up today's service sector data in 3 simple words: rebound, What rebound? Business confidence plummeted to record lows. And it seems to be a lot of confusion in the services economy because the PMI printed at 51.4, which really doesn't offer that much hope for the second quarter GDP. Now, the ISM data hit and soared to 56.5, the highest since 2015 of November. It beat expectations by 5 standard deviations, well above the forecast. But when we look at all the economic information, we always see this little dead cat bounce. And what happens the next month? It declines even further. The trend is down, it is not up. Now, the central bankers of the U.S. government, they can use manipulation, they can massage the numbers. It doesn't really matter because what they're doing is they're creating this tiny surge in real estate, in retail, in consumer confidence. But eventually what happens? The real information shines through. And there's nothing they can do about it. Yes, they might have a month or two where they say, look, everything's turning around. You know how many times they've said this already? Go back in time when they looked at the employment model. They said, oh, look, everything's turning around. We've manipulated the unemployment, and now we're down to 4.7. But no one believes this anymore. In real estate, in retail, they keep telling us it's starting to turn around. I think this is the 9th time they have said this. They use these little surges to convince everyone that everything is fine. But it's not. We see the U.S. trade deficit jumps in May. The stronger dollar is putting a lid on exports right now. And we're seeing that domestic trade, it is completely disintegrating. Heavy truck orders, well, they have plunged to the lowest since 2010. Now, according to the latest data from ACT Research, which was released today, June orders for new heavy-duty Class 8 trucks, they have plunged to 13,100, the lowest since 2010, indicating that trucking companies, the forward-looking bedrock of any viable recovery, along with rail traffic, well, we're not seeing it because we're seeing a weak freight market and a sluggish economic growth. So this month's order activity was the lowest monthly since July of 2012 and the worst since 2009. Now, trucking companies, they ordered the 13,100 Class 8 trucks because these are used for long-haul routes. Now, the orders that came in, they are the fewest orders since the third quarter of 2010 and more than 30% drop from last year. So this tells us, and it fits into our model, that retail is contracting, GDP is contracting, unemployment is fake, phony, and false. People do not have jobs. Factories, their factory orders are not coming in. Manufacturing is declining. But since the Brexit, we've noticed certain things, that the Baltic Dry Index has climbed to 694 since we've had the Brexit. And the central banks, they've been slowly letting the air out of some of the bubbles because they realized that these bubbles were getting too big, too fast, and they were going to lose control in bringing down the economies. Now, UBS is out there, and they are saying that gold has entered a completely new phase. Well, yeah, it has. It's trending upwards. And we can see as it trends upwards, the dollar is going to lose value. Now, we can see since the Brexit, a lot of things have been happening, and we mentioned some of them yesterday, where we saw Standard Life, Aviva, M&G, they all suspended trading on property funds because they're worried about property values dropping. Well, we can add Henderson and Columbia to those where they're saying that, yes, we need to suspend the property funds because we're worried about the property values decreasing. And of course, what they're doing is they're saying this is because of the Brexit. Now, we also are going to add Canada Life. They have suspended UK Property Fund because they said they're dealing with £222 million of property fund, and they need to protect the interest of all investors in the property fund. They're saying the ability to suspend trading prevents fund managers from being forced to sell, in this case, property interest, too rapidly and helps them achieve a better outcome for all their clients. And what we're seeing is every financial institution, central banks, they're suspending all of this to protect themselves. Because, as we can see right now, they needed some type of an excuse to do this, and they're all falling back and using the BREXIT. We see Europe's banking system, it is collapsing. We see Deutsche Bank and Credit Suisse, well, they are spiking a default risk. And we see the Italian banks are also flashing red signals that we have major problems. Deutsche Bank is looking to sell at least $1 billion of shipping loans to lighten its exposure to the sector. And what they're really doing is they're looking to lighten their portfolio, and this includes toxic debt. So we see Deutsche Bank, Monte Paschi, we see Credit Suisse, and other banks, other EU banking systems, they are on the verge of collapsing right now. They're all insolvent. And when we look across the globe here in the United States, we see the same exact thing. There's really no difference. Now, Goldman Sachs is out there, and they come out with a warning. They're expecting a 5 to 10% drop in the stock market in the next few months. Now, is it only going to be 5 to 10%? Is it going to be more? Well, this is something where we're going to have to wait and see. But we're noticing right now is there are many financial institutions, many quants that are out there, and they are reporting that this market is ready to come down. Now, we know the central bankers, they don't want this to come down without them controlling it coming down. We know we have an election year coming up, and we see the race for the White House between Trump and Hillary is heating up. We see the FBI came out saying that, yeah, we have no evidence whatsoever to indict or press criminal charges against Clinton. And we all knew this was going to happen because the FBI is not really in business in solving crimes and figuring out if someone broke the law. They're really there to protect government employees, to cover up crimes, to pay off patsies, to spy on the American people. And what we're seeing right now is they're very nervous about this race. And as we approach the election time period, we have the world shaking, rattling, and imploding all at once. And the U.S. government, central bankers, they might use this to say, okay, listen, because of the Brexit, because of this event, whatever they're going to use, we need to postpone these elections. Now, am I saying this is going to happen? No. But they're very nervous about the outcome because they can only manipulate the elections so far. And I think they're very nervous about how this is all going to turn out. And they rather have no elections than have the wrong person get into the White House. Because they always have this plan. They need the person in there that will take their marching orders, will do what they want. And if they don't get what they want, they'll go in a different direction. They'll just stop the process. And they will have the ability to do this by saying that there's an event, there's an economic problem, which is catastrophic. and they can postpone it, maybe temporarily, maybe for a longer period of time, to get other events started. And this is something that we need to watch out for, because as we get closer and closer to the end of this year, we see things are really starting to heat up, to fall apart, and this is something that we need to keep a close eye on. And this is why I continually say we all need to be prepared, because we don't know when this is going to happen. It could happen tomorrow. It could happen next month. It could happen in 6 months. So if you're preparing, you're still purchasing food, water, supplies, continue to do this. Get your medical supplies, get your weapons, get your gold, get your cash. Actually, get your gold now, because as we can see, gold is continually moving up. Whatever you're doing, wherever you're going to Costco, you're going to supermarket, BJ's, Sam's Club, doesn't make a difference. You're going to lifereliance.com, where you're ordering your food, your water filtration systems online, you're having it shipped right to your house. It makes no difference. Continue to prepare for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.